Good afternoon and welcome to this weekly market update from AGM Markets. Today is the 15th of March 2013. Basically what we'll do today is just kind of just sort of wrap up the week, go through what's been going on in the week, have a look at any interesting setups that you can focus on for next week. So I'll basically just be going through technical analysis on Euro dollar, cable dollar, Swiss, the Aussie and gold. For anyone who follows out there, we have 3 moving averages on each of these charts. The red one is a 55 simple, the blue is a 100 simple, and the gold is a 200 simple moving average. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com, that'll be very appreciated. Okay then, this is the Euro dollar daily chart. So what's been going on this week? Let's zoom in a little bit. We've basically just been chopping, really, going sideways in between a sort of 150 pip range here. Where, I mean, if you look at the sort of the daily candle closes, we haven't had a close outside of this. Yeah, pretty much just under. I know it's pretty much on the 150 pip range. Yeah, for pretty much all week. So very tight trading. Of course, range traders would have been loving weeks like this week, but if you're looking for a decent trend, the trend followers weren't having a great time. If you look to the bottom left of this chart, we spoke about it before, we had a nice bounce off the 100-day moving average, and as you can see now, we're currently bounced off the 200-day moving average. This is where you can see if you wait for a nice sort of candlestick reversal off of one of these moving averages, you really can pick up quite a few pips here and play the bounce. Yes, I mean, last week we ended the week, we got capped by this 100-day moving average, and you can then see that we've come back down. We're now, so in all fairness, we're actually in between a slightly bigger range here as well, between the two key daily moving averages. If I zoom out slightly, and one fib that is very key in my opinion is if you draw from the key lows there, the key swing low, to the highs. With the 50% retracement, which we just got shy of testing this week, but don't be surprised if we came down and tested it next week. That stands at one spot 28.73. So keep an eye on that. That's one definitely to keep an eye out for if we do come down there next week. And of course, you've then got the other fib. And in fact, I'll zoom into the 4 hours so you can see it a bit clearer. From these highs to the lows here, anyone looking for healthier selling opportunities off of a big level, then you could perhaps, if we get up to this 50%, you could perhaps sell at that level and put stops, I don't know, behind the 61.8. That's quite a common trading strategy. But yeah, I mean, the last sort of few weeks we've basically just been trading. The euro dollar's basically been trading off of this trend line resistance. You can see the key test there, and it's pretty much been holding for all of February, really. But if you, so I'll just delete this fib actually, so you can see a bit, so you can see this trend line a bit clearer. If you zoom in, you can see that we've had a 4-hour candlestick close above this trendline resistance here, and the current 4-hour candle has come back down, tested it, and this may act as new support now. So it's always interesting to see that trendline breaks. I mean, personally, I think the sort of on this 4-hour chart, you can look at a 4-hour candle for the trendline break and a confirmation. But of course, the daily and the weekly candle charts are always stronger. I wouldn't be surprised to see a daily candlestick close inside of this trendline resistance, but the odds, in my opinion, would be to close above, because we've had this 4-hour candlestick close. And of course, then next week we may come up and see a test of this 200 bar moving average. So that's the key focus really on the daily and the 4-hour for some bigger perspective. Any shorter term players, if you'd like to look at the 1-hour chart, then for any sort of buying opportunities, then you've got this fib from the lows to the highs. So the lows are at one spot 29.11, the highs are at one spot 31.06. If we come down to the 50%, see what happens there. We could get a nice reversal and a rotation towards the upside. Let's have a look at the cable chart. This daily chart, as we've been saying the last few weeks, we've had a very aggressive sell-off here on this cable daily chart. For healthier sort of selling opportunities, I personally would prefer to see it come up and test this 50% retrace, or even the 55-day moving average in this daily chart. I mean, I think I said in last week's video, we are due some sort of retracement, and you can now see we're starting to get it. I mean, yesterday's daily candle was nice and bullish, but today's one hasn't been so convincing towards the upside. But yeah, I mean, in terms of the 4 hour, nothing much of interest really in there. I mean, if you look at the 1 hour, if you want to look for any buying opportunities similar to the euro dollar, you could draw your fib from the lows there, which stand at around the 1.4831, and the highs are at 1.5175, and then that 50% retrace comes in at the 1.50 handle there. So yeah, that's the cable chart pretty much on those time frames. Not as interesting as the euro dollar in my opinion, or this dollar Swiss chart, which I'm going to look at now. The dollar Swiss chart has been really interesting on the 4 hour chart. Similarly to euro, we had that downtrend resistance. The amount of times I've said in these videos that the euro dollar and dollar Swiss really does opposite correlation. So on euro dollar we've had that downtrend resistance, and on dollar Swiss we've had a decent uptrend support, which can be seen there. I mean, there's many ways to draw your support levels, your trend lines here. Some people like to draw it from the edge. You can also draw them in. There's also another one here. There. So, I mean, I personally don't really trade trend lines, but they're good to have a sort of view of the market. But they are tricky to trade because sometimes you could bring the trend line in, and sometimes you could bring them out and bring on the edges of the candlestick wicks. But you can see we're starting to break down here really, and this is why I've drawn the 3 different trend lines on it. So you can see on this recent one, on the real the bottom one drawn from the bottom of the candlestick wicks, you can see we had a 4 hour close below this, and this current 4 hour candle, very similar to euro. Remember we had that break of the trend line and it then bounced off it. It's doing the exact same thing on the dollar Swiss here. So it's broken below, it's closed below. This current 4 hour candle has come up, tested it, and it's starting to bounce a little bit. So keep an eye out on that. Wouldn't be surprised to see some further downside here. And also, if we delete these trend lines, I want to show you a fib setup, which could come into play next week. So if you draw your fib from the lows to the highs here, then the 50% retrace comes in at 0.9293. So a lot of people will most probably have pending orders in at that level of stops, probably just behind the 61.8. That's a very common way to trade. So yeah, that's the one setup. I mean, because that trend line has pretty much broken, to be honest with you, but it is still technically in an uptrend. So I wouldn't be surprised to see what happens if we do come down here at this 50%. Also, the 200 bar moving average could be at that level and could provide a nice bit of confluence there for a rotation towards the upside. Okay, that's dollar Swiss done. Let's have a look at the Aussie dollar chart. This is the daily chart. It's been very aggressive recently, so we'll zoom in a bit. Let's have a look at let's have a look at this 4 hour chart. I've been looking at this week. Basically what we've had here, I think this was the end of last week, this fib here from the lows to those highs there. So if you just draw the fib wider, so you can see what really happened. We came back down and we tested this 50% retracement. It broke a little few pips, then we really have rotated towards the upside here. So a classic example, when the market goes up, look for a healthy retracement, bam, straight off the 50%, perhaps you could put your stops around the 618, and then we've rotated towards the upside. And really it's just been really popping up towards the upside here. On each of the, I mean, you could have drawn another fib from the lows to those highs there, but it didn't quite come down to the 50%. Now it's probably coming off the 38.2, but similar sort of thing really. You can trade off the 38.2, put a pending order in, and maybe put your stops in just behind the 50%. That's quite a common trading strategy there. But yeah, I mean, that's really all I'm really focused on, to be honest with you, on the Aussie dollar. I mean, if you flip to a shorter term time frame, nothing massively of interest there, to be honest with you. I suppose you've got the trendline support, keep an eye out on that if we do come down and test there. So that's for the forex. Let's have a look at gold. Gold has really been disappointing recently in terms of sort of action. If you zoom in here and we look to the right of the chart, that key 1569 level has been holding this week, but it's been struggling to rotate higher here, especially with that daily candle there where I'm hovering my cursor over now. A key reversal there, and we start to get a nice pop towards the upside. You would have thought they would have come up and tested the 55-day moving average, but it failed. We had two bearish candles there, came back down, tested that 1569s, pierced it a few times with the daily candles, and it's trying to rotate towards this upside, but it really is struggling here. But in the day, it's still above this 1569, so until it closes below, then you have to say that the odds are towards the upside. And I wouldn't be surprised to see a test of that 55-day moving average. I mean, if we flip it to the shorter term time frames, nothing much of interest. The only focus for me really is this daily chart here, because it's been much more technical, in my opinion. Of course, you can actually draw this trendline resistance here as well, just to keep that in mind. That's been playing out quite nicely. Yeah, so I mean, it's quite a disappointing chart really, gold, because it is normally quite technical, but it just hasn't really been moving much, especially this week. Really has just been going sideways, not much acceleration either side really. Okay then, that's all for today. Hope you enjoyed that technical analysis. Feel free to comment under the video if there's any other charts that you want to look out for. We'll post this on our Twitter feed as well, which is at AGM Markets. Feel free to comment there as well if there's any other pairs or anything else you want to look out for on these videos. I'll happily do this. I'll happily do something on the videos for you next week. Okay, thanks for listening. Have a great weekend. We'll catch you next week. Thanks for listening. Cheers.